Welcome to the fourth annual edition of Double Line's Roundtable Prime. The new year appears to offer cyclical downturn in a landscape of secular change as the world looks to be on the threshold of global recession. Moreover, trends that for decades have driven economies, markets, monetary policy, and governance might be staging reversals. Join our six thought leaders as they analyze the macroeconomic state of play, offer market outlooks, and share their best investment ideas. Your host is Jeffrey Gundlach, CEO of asset manager Double Line Capital. Moderating the discussion is Double Line Deputy Chief Investment Officer Jeffrey Sherman. Our distinguished guests are James Bianco, President and Macro Strategist at economic consulting firm Bianco Research; Danielle DiMartino Booth, CEO of economic and financial research firm Quill Intelligence; David Rosenberg, President of economic consulting firm Rosenberg Research and Associates; and joining Roundtable Prime for the first time, Charles Payne, Fox Business News anchor and host of Making Money with Charles Payne, and author of Be Smart, Act Fast, Get Rich, and Unstoppable Prosperity.
So with that, let's just roll into our last section here. I asked everyone to come up with your favorite trade. And so that was not it. That was the portfolio asset allocation. Give me the best idea. And I'm going to start with you, Rosie. Best idea for 2023, one shot.
Okay, well, I'm going to go with what is not going to be shaken or stirred. I'm talking about bond. Long bond.
Yeah, okay. I was thinking martini, but I get the reference now too. Okay, the long bond, and I assume that's in the U.S.
Yeah,
okay.
30-year. I would say even the biggest bang for the buck, I think, will be the 30-year strip.
Yep. Okay, pure duration trade.
Yeah.
Yep. All right.
Rates.
Mr. Bianco, to you, sir.
Long gold. I think if you wanted to just take a speculative trade that's ready to go, it's been, I've joked that I almost feel bad for Peter Schiff. He's gotten everything he's ever wanted, and the price of gold has only recently started to move, and it's got a big catch-up to come. So if I had to pick a trade, it would be long gold.
That's my number two.
You can't have a number two.
You
love all your children. You have allocation.
For the record.
Right, okay, fair enough. Jeffrey?
I'm going with the long bond, U.S. Treasury.
Yeah. Charles?
I wrote down as a stock, United Rentals. I mentioned it earlier. I'm just going to hold on to that stock. Got it last year up about 15%. I love it as a domestic play and some other macro issues.
Yeah.
Fall in love with your partner, not your stock.
One thing nobody's mentioned is quantitative tightening. I think that continues on in the background, and therefore I go back to my A-REIT. And looking to go short in that position because I think that the less liquidity available to these types of vehicles, the more they're just going to get pummeled.
Well, there you have it. That is the fourth annual session of Roundtable Prime. I want to thank all of our panelists today. I think we covered the world. We covered markets. We had some ideas. But I want to open it up to any parting thoughts before you guys leave today. So any other parting thoughts? I love the
only thing I think we talked macro, but one thing I'm really concerned about is the population, the slowing birth rate in the world, and particularly in America, but China. We talked about Bank of Japan and how smart they've been, but a lot of policies out there just are now being predicated on the fact that I'm just concerned globally, and there's a big movement. Mankind, I call it man against mankind's existence. It's been around for a few hundred years. In one form or another, but it's taken on extreme power right now, and I'm just kind of concerned about that. We won't see anything major near term, but I think when we wake up to it, it might be too late to turn it around.
Yeah, I agree with that. It's very long term too. And China had decades of tremendous increase in the labor force. Now it's going the other way. So if you want to play that theme, and I've been talking about this for years, this is not for 1 year. It's not even for 5 years, but India. Because the demographics there are almost identical to where China was, 35 years ago. And people say, when you say India, you get a tick off laundry list of why you shouldn't do it, all these really terrible things. But to that, I always say that means it can get better. It's like what I say, never buy a AAA rated corporate bond. There's only one way that it's going.
Very youthful demographics, strongest growth in the world.
Very
And,
well
their
educated.
stock market very recently just came off a record high.
And they're due
huge
to,
outperformers last year.
they're due to surpass, as early as this year, they're due to surpass China as the most populous country on the planet. So we're going to have to update our thinking that, all the people live in China. It might be all the people live in India as we go forward.
So I would jump in with one last global thought, and that's that the United States the Fed is not the only one engaged in its own form of quantitative tightening. And we forget what 2018 felt like when the world started shrinking its balance sheet. That's going to continue. The one thing Jay Powell will not talk about is that balance sheet. So we could be facing a situation where he wants to keep shrinking it, even if he begins to lower interest rates. It's out there, but I think people should really be paying attention to the contraction in liquidity right now.
I agree with that. And very often during talks and stuff, I say, no one's talking about quantitative tightening. So I'm glad you brought that up, because that is definitely, lurking in the background.
There's one thing that we didn't cover, if we have another hour.
And then we can talk after you finish.
Well, this will go into the.
We'll just put you on record. Go.
This will go into the safety. Well, let's go in the safety valve, the bond bullion barbell, which is geopolitics.
Right.
And so, well, not just the fact that this war in Ukraine is going a lot longer than any of us would have thought, but also China, and just something to have in the back of our minds that every year there's some sort of big surprise on the geopolitics. What's that going to be?
If I was to throw out one other thing, 2022 saw an amazing feat. The ARK fund was down 65%, and it got inflows. There's no other example, especially of a large fund, that I could see that anywhere remotely that anybody could be down that much and still get inflows. The inflows, by all analysis, appear to be hot speculative money. Oh, it's gone from 160 down to 30, and I'm going to buy it because it's going to pop to 45, and I'm going to get out at 50% rally because it's going to 10. It usually doesn't work that way.
Mm-hmm.
And I think the bigger issue is if it's down 65% and we're still degenerate gambling, and that there's going to be a pop in this, the speculation is not gone yet. We still have some more steps to go before we finally get rid of it all. Maybe,
But since you're putting an
maybe your
asterisk,
15 PE on 190, sub 3,000 S&P might go a long way to kind of wringing that out. But we're not quite there yet.
but I will say, Jim, since you're putting an asterisk on this never happening before, you got to give props to Kathy Wood, because she'll make some prosperity preachers blush. I've listened to a few of her presentations. Like, who do I send a check to?
Right? No. I think that what she's very good at is she believes what she says. Right. She is not a huckster. I think she's sincere in her belief about her stocks. It ain't working, but she's sincere about it. Yeah.
And that goes a long way. So thank you all. Enjoyed spending the time with you. Hopefully we can do it again, and wish you all a happy new year and a prosperous 2023.
All right.
Thank you.
Thanks, everyone.